Hi, in this video we'll be looking at the pros and cons of taxation. Now this will look more generally at taxation as a whole, and some of these pros and some of these cons will be more applicable to specific types of taxation, say income taxes for example, or say import tariffs. So in the future we will also be doing individual videos on each type of tax, but this should give an overview in general of the pros and cons just generally for taxes, as there are some common themes we see in general. So we'll start with the pros of taxation, or the benefits that we see from it. There obviously are some, because we see taxes in, well, every economy in the world. So the main one is obviously going to be that we generate revenue from taxation. So governments need to spend money on certain things. These are things we see as public goods. So, for example, defence, spending on the military, spending on developing our roads, our transport infrastructure, and just generally lots of things that a government will spend on. Taxation allows us to generate revenue. And almost everyone will agree that we need to chip in some money so that the government can offer us these services, which may not be provided in a free market. So that's our number one and key benefit of taxation. But there are further benefits from taxation. They don't just generate revenue for us. We can also try to change behaviour of people using taxation. And so if we think of an example, at the moment climate change is big on the agenda. So for example, consumption of oil or fuel in our cars, we may see taxes on fuel, and while these do serve a purpose to generate the government revenue, another reason for them will be to try to make people use less fuel. And so we can also see this on things like alcohol or cigarettes. We see these taxes because these goods have what we call negative externalities. They have a negative impact on society as a whole. Fuel can lead to climate change, so if we tax this, hopefully people will use less of it. Equally, alcohol, these can cause people to have diseases such as liver failure. They can increase strain on the health services. So again, we want to reduce consumption of alcohol, so we'll put a tax on it. If there's a higher price, people will consume less of it. So that's another benefit of taxation, is that we can change people's behaviour. We can make them use less of something that we don't want them to be using. Tied in with this previous one is reduce negative externalities, but this is a point in its own right, that we can change people's behaviour and reduce the negative externalities associated with alcohol and with fuel. But this change behaviour point is also relevant for, say, if we want to make people do something instead that has positive externalities. So we can change behaviour either way, either to reduce externalities or to increase positive externalities. So, but yeah, these points definitely intertwine with one another. The next benefit we can see from taxation is redistribution. So, and this will be redistribution of income and redistribution of wealth in our economy. So we know with income taxes, one of the key reasons for income tax is to redistribute. So the top rate of income tax in a country may be 40%, and this is for people, say, earning £150,000, for example. And whereas if you're earning, say, £10,000 per year, you will pay no income tax. You pay no income, or you pay no tax on this income. Whereas if you're earning a lot of money, you pay a lot of tax. You pay 40% of tax. And so this allows us to redistribute this income. These people that are earning £150,000, we can redistribute that to the person that is earning £10,000. And we view this as good because poorer people need more money in order to, say, afford the basics of life, to buy their food, to pay for accommodation and shelter. So we use taxation to redistribute, because this generate revenue point, a lot of the things that the government is going to want to use revenue for is to help out these poorer people in our society. And we have things like social care, and we offer social housing to people, we offer people benefits. So if we want to generate this revenue, it's often viewed as better to generate this revenue from richer people in order to help the poor. So this is redistribution of income from the rich to the poor. That's another benefit of taxation. Taxes can also help a government support domestic industries. It can do this if we use what we call import tariffs or import taxes. This is, well, it's sort of in the name that we put a tax on imports, So any good that is imported from another country, we may, for example, put a tax on imports from China, as obviously lots of imports for a number of countries come from China, and these tend to be lower priced. So if we tax these imports, it will increase the price of imports from other countries, and it will thus allow domestic industries to become more competitive. If our domestic industry is relatively expensive, say we're domestically producing steel, and on average, say some unit of steel costs £100, whereas there are imports from China where the steel only costs £80 per unit of steel, well, we can put a tax on steel of, say, some percentage, and that tax will increase the price of steel to, say, £110. Or if we were going to have a 50% tax, it could be, say, £120. The point is that we make this steel more expensive than our domestic product, and so people are going to demand our domestic goods. This is important for economies. For example, if you have lots of people employed in the steel industry, you need to protect it, and you need there to continue to be demand for this steel. Otherwise, lots of people are going to lose their jobs at the same time, and, well, whole towns, cities, and a large portion of your economy becomes unemployed. The idea behind import tariffs generally should be that you protect these industries for some time to give these employees time to retrain and move into different industries, but this doesn't necessarily always happen, and eventually, when the import tariffs are no longer used, you have just mass unemployment. But that is the idea, to support domestic industries when imports are very cheap. Let's move on to some of the cons or the drawbacks of taxation. There obviously are some negatives of taxation, as many people just do not like taxes, and often for good reason. So the first one of these is that people may not change their behaviour in response to a tax. We said that one of the benefits of taxation is that we can get people to change their behaviour. Let's say if we were to increase a tax by 20% on cigarettes because we want people to consume fewer cigarettes. Well, the thing with cigarettes is that they're addictive, so even if we increase the price by 20% through taxation, people may not decide to stop consuming them or to consume less of them because they're addictive. And similarly with, say, fuel, if we were to tax petrol and diesel by, again, 20%, people may not reduce their consumption because we're still reliant on this, say, to use in our cars in order to get to work. So the benefits or the whole reason that we're using this taxation may not actually come to fruition. We are taxing people to change their behaviour, but they may just not do it. And we can have some of these other cons in this list, in addition to the fact that our whole benefit, our whole purpose of the tax was, well, in vain. People didn't change their behaviour. The next con is going to be tax avoidance, and this is quite a straightforward one. People may avoid the tax. People don't want to pay money to the government if they can avoid it. So, and tax avoidance, just as a side point here, is completely legal. This is where people will change their behaviour in order to avoid paying a tax. For example, if we were to tax people on their incomes, a very common tax, income tax, people may just decide to work less because the government's taking money away from them. Say if the government is taxing 40% of their income, they may just decide, you know what, I don't want to go to work as often because it's all being taxed away. I'm not earning as much because of this tax. So people may avoid the tax by just working less. And this obviously has negative impacts on an economy because if people are working less, we're producing less, and so on. So quite an obvious disadvantage of taxation there. But I haven't listed it here, but we could also have tax evasion, which is where people illegally avoid tax. So probably should have a point of tax evasion there, which say you just refuse to pay the tax. Say if I run a cash business and I'm paid just in £20 notes, I may just decide to not declare this income to the government, and so I don't have to pay it. And this means that the government has to incur expense to try and find people that are evading taxes. And so it can be quite expensive for a government to monitor what everyone's doing, what everyone's incomes are, and how much tax they should be paying. So this is another negative of taxation. The next drawback of taxation is going to be reduced competitiveness. And this may seem a bit strange because in one of the benefits of taxation, we said that we can protect domestic industries by taxing imports. And while this is true, when we tax imports, what we're effectively doing is we're stopping the goods from other countries from competing against our domestic products. Say if our domestic cars, say, cost £15,000, whereas we could import a car for only £12,000, what we're saying is that we're going to tax this import and make it cost more than our domestic product. So even if this domestic business is very inefficient, and clearly it is because it's producing a car for £15,000 when in fact someone else can produce it for cheaper, we're actually incentivizing this, and we're saying, you know what, we're going to allow our domestic businesses to be inefficient, and we don't want these imports, these more efficient, these cheaper goods to enter our economy. So this is going to give us reduced competitiveness because we're stopping this competition between businesses. If we just didn't tax our imports, domestic businesses, well, they might go out of business, or they might be incentivized to improve, to cut their costs and actually drive down the price themselves to £12,000. And even if they don't do this and they go out of business, well, oh well, at least our domestic consumers can purchase a car for cheaper. So we have reduced competitiveness because we're not allowing the market to do what it does, and that is weed out the inefficient companies and to allow innovation and force companies to improve, cut their costs, innovate, improve their products, and so on. So reduced competitiveness is a drawback of import taxation. We can also see reduced economic growth from taxation, and this ties in with a few points below it. So one way in which we see reduced economic growth is that people have reduced or lower disposable incomes. If, for example, your income was originally going to be £100,000 per year, but you've got an income tax of, say, 40%, and it is more sophisticated than this, that we have bands of income tax, but just for simplicity, let's say that someone is taxed away £40,000. Well, then they only have £60,000 left to spend on goods and services. And a lot of this is going to be spent on, say, rent, or on, say, your mortgage, and on energy bills and your car and so on. And you have just less left over to spend on other goods and services. If we have people spending less on goods and services, this is going to reduce our economic growth. There's going to be less production in our economy. Equally, if we, say, have taxes on corporations, on business profits, then there's less incentive for businesses to generate profits. And so if we have reduced profit motives, again, firms are going to, well, they're going to be less incentivized to cut their costs, to produce better products, and to produce more. And obviously production is what gives us economic growth, so taxation can cause reduced economic growth through this way. And we can also, if we have reduced profits, because we're taxing, so if we're taxing away profits, say a company generates £1 million of profit in the year, but we're going to tax away 20% of this, this is less money that this business can spend on investment. What does investment do? Investment into research and development, to develop new products, to reduce their costs, to produce more goods in the future. Again, this is going to reduce our long-term economic growth, because businesses have less money to spend on their innovation for the future. So all of these factors can lead to reduced economic growth in an economy, and we can view it through all these different methods, but the fact of the matter is taxation just takes money away from individuals and businesses in an economy and gives it to the government. So if a government decides to spend this money in a positive way that benefits economic growth, well, that's great. However, if we just look at one side of it, we see that individuals have less money and businesses have less money, so they are going to have less to spend, so this is going to reduce our economic growth if we just ignore what the government does with the money. And of course the government does do things with the money, but this is a definite negative effect, that our economic agents have less to spend. Another impact is going to be unintended consequences of taxation. And we said that there are various things that a government can use taxation for. They may want to generate revenue, change people's behaviour, reduce negative externalities, and these are the reasons why a government will implement taxation. Of course, redistribution and support domestic industries are other reasons that a government would implement taxation. But this is not to say that these are the only impacts that a tax will have. And we've already discussed some of these in some of these other cons. So tax avoidance is one of them. And this is one of the main reasons that we're going to get unintended consequences. If we put taxes on people's incomes, they're going to try to avoid them. And there are lots of negative effects that can come about from people avoiding taxation. So we talked about people working less, but there are lots of other things people can do. For example, if we were to introduce a toll road, or just generally introduce a road tax, so people, they're incentivized to use the road less, and that's the purpose. That makes sense. Cars can have negative externalities, they can cause pollution, cause congestion on our roads, so that's great. However, this tax doesn't look at what people are going to do instead of going on the roads. So if we have, say, a toll road, and we're saying, you know what, we don't want you driving down this road, the idea is that people will just use their cars less, but in reality, they might just go a different route. And this could be, say, a longer route that goes around the toll road, and it leads to even more pollution because people are just driving further. This could also cause increased congestion on these roads, so their journeys take longer, and so on. So there are lots of unintended consequences. Another good one is, say, if we were to put a tax on alcohol, well, maybe people, instead of buying this really expensive alcohol, may go to the black market and consume Class A drugs instead. And that's obviously a bad unintended consequence. We want to tax alcohol because it can put people in the hospital, but by taxing alcohol, we're actually incentivizing them to do something that's potentially even worse for their health. So lots of potential unintended consequences that can be put into this bracket. The final one is that it's difficult to set the correct tax level. And again, we can go back to our pros and cons of taxation, that we want to change people's behaviour, we want to reduce negative externalities, we want to redistribute income. But in fact, we may have some sort of goal in mind, and we may say, you know what, we want to redistribute income by a certain amount, or we want to change behaviour, we want to reduce the use of petrol by 30%. Well, if we want to reduce the use of petrol by 30%, how much do we need to tax petrol? It's very difficult to say, and we can do economic analysis of this, but the fact is that if we do set a tax, we're going to have lots of unintended consequences, we're going to have people trying to avoid the tax. It's very difficult to actually decide on what the best level of tax is. So we may not be able to achieve the goal we set out to achieve with our taxation. And it can end up doing more harm than good, as we've seen. There are lots of negatives of taxation on this list. So those are some of the cons of taxation. Obviously, taxes are useful in some circumstances, and people widely accept the fact that you need some level of taxation. The government needs revenue to be able to provide certain goods and services for the economy. However, we have lots and lots of taxes in our economies, and some of them do more harm than good. On the whole, taxes are a good thing, but there can be debate on specific taxes that may be too high or too low, or maybe just shouldn't be in place at all. And that more specific debate is potentially a topic for future videos. However, that will wrap up this video, so please do leave a like if you found it interesting. Make sure to check out the channel for more videos like this one, and subscribe to add some econ to your subscription feed.